So in one of my previous videos, I was talking about how investments can grow well using the concept of pound cost averaging. It's a really effective way of using risk to increase the value of a portfolio over time. But today, I'd like to talk to you about a related subject which potentially has really destructive effects on the value of a portfolio. My name is Martin Dodd and I'm a financial advisor. So what is it that I'm talking about that can have such a destructive effect on people's investment portfolios? Well, what I'm talking about is pound cost ravaging, or the irregular sequence of investment returns that can have a really destructive effect on a portfolio when people start to draw income. So typically this will affect people in retirement that are starting to use the new pension freedom rules that have recently been introduced. So traditionally in retirement, investors want steady, stable investment returns. They want to be away from risk and not suffer the volatility that comes with being invested in the market. Stock markets traditionally go up and down in value, so it's not a place that many investors want to be in retirement. Now, I'd just like to show you an example, two examples of the potential effects of pound cost ravaging, or irregular sequence of returns, can have on an investor's portfolio when they start to withdraw income. So we've got two scenarios here. Very, very simple example. Imagine that we've got £1,000 invested in a portfolio and the investor wants £100 a month income for a 4-month period. So in scenario A, let's say the starting price of the shares is at £10, so 10 shares need to be sold to generate an income of £100. Month 2, the share price has gone up to £10.83, so 9.23 shares need to be sold to generate that £100 of income. Month 3, price has gone up again to £11.66, and this time 8.58 shares are required to generate that income. Final month, £12.50 is the new share price, so 8 shares need to be sold. A total of 35.81 shares need to be sold in order to generate that total income in that 4-month period. Different scenario for our second investor. Same situation, wants £100 a month from £1,000 of investment, and the first month is exactly the same. £10 for the share price, so 10 shares need to be sold. Month 2, unfortunately, the share price has fallen to £5, so this time 20 shares need to be sold to generate the same level of income. Month 3, share price has gone up a little bit, so this time 13.33 shares needs to be sold to generate £100 of income. And in month 4, just like in scenario A, the share price is back to £12.50. This time 8 shares need to be sold, and bottom line is that 51.33 shares need to have been sold during that 4-month period to generate exactly the same income as required for scenario A. So what is the effect of the ups and downs, or the straight line progression of investment values on that £1,000? So for scenario A, which is smooth line progression of investment returns, the value after 4 months would be £802.38. We can already tell from scenario B that we've had to sell more shares to generate the same level of income. But what do you think the value would be now? Wait for it. £608.38. What a massive difference that makes. So it's very easy to see that over a 20 or 30 year retirement, if you are in two riskier investments, the time at which you take the money out for income can have a huge effect on the underlying value of your investment portfolio. And it is literally quite possible to run out of money before you run out of life. So this is a bit like going on your annual summer holiday for a fortnight and taking your spending money of, say, £1,000 with you, and getting to the second Tuesday and you've run out of money. But somehow you've got to eat, sleep and drink before you come home on the Saturday. So understanding the sequence of investment returns and how they can impact upon the value of your portfolio in retirement is really critical to the success of using the new pension freedoms. So my name is Martin Dodd, and I look forward to seeing you on the other side in our next video.